So hello guys, welcome to today's video. In this video I'll be helping you guys solve one of the most difficult problems you're actually having, which is being able to determine which direction you want to trade to. Now when it comes to trading, the most important thing for every trader is being able to identify which side of the market they want to trade to and which side they don't want to trade to. Now in order to actually be able to identify which side you are interested in trading to, you need to understand the concept of market structure. Now, when we talk about market structure, we are talking about the kind of market movement we actually have. So this is the uptrend, the downtrend, and then the ranging market. Now, in as much as we don't trade a ranging market, it also helps play part in making your decisions when it comes to look for your trading opportunity. So before we get started with this video, if this is your first time on my channel, kindly help me by hitting on that subscribe button, like this video, and tell me what you feel down in the comment section at the very end. So now with that aside, let's get straight into this video. Let me share with you a step-by-step guide on how you can decide which direction you want to trade to when breaking down the market. And for that reason, this video will be more of a market structure video mixed with bias deciding, meaning deciding which direction you want to trade to. And I'll be using some SMC terms, which is some smart money concept terms. And if you're a price action trader as well, you'll be very used to some of them. So now the first thing I'll do in this which market is this? This Chef JPY, which is a Swiss francs and a Japanese yen. Now before we get into using the main chart itself, let me give you some illustrative example on how to decide which side of the market you want to trade to. Let me say, for example, you have a market moving in this manner. Now this sort of market is obviously what? An uptrend. This sort of market is obviously an uptrend. And when you're in this sort of market, what are you interested in? You are interested in buying, right? Now this is the point number one. When you have a market moving this way to the upward side, your main interest is actually in buying, looking for buying opportunities by identifying supply and by identifying support and resistance, and then your demand levels in order for you to actually get a buy. If you are someone who doesn't trade demand, you trade fair value gaps, you look for those fair value gap. Whatever concept you trade, you look for a market moving in this manner to the upward side, then you look for that opportunity to grab your buy. Now on the other hand, the other sort of market structure we have is the downtrend. Now the downtrend, opposite to the uptrend, this one moves downwards. You see, it comes downwards. Now when you have this sort of market, what are you interested in? You are obviously interested in looking for a selling opportunity. You are more interested in the market, so that you are more interested in taking sales opportunity in the market. Now, in order to decide this, we also have another form of market structure, which is the one that gets a lot of you stranded. And that one is the ranging market. Now the ranging market is one kind of market that moves haphazardly. It doesn't go to any specific direction. It keeps roaming within a particular range. That's why it's called the ranging market. Now based on how I trade, I avoid the ranging markets. Yes, when I see that the market is ranging, I avoid it because my system doesn't work well with the ranging market and I'm not interested in changing strategy. The only time I consider trading ranging market is when I'm looking for breakouts and pullbacks, or waiting for a change of character and then getting in at the first change of character. Now that aside, my main interest when it comes to trading that I will also advise you to pay attention to is simply look for buying opportunity when the market is moving to the upside by creating higher lows, higher highs, higher lows, higher highs, and then so forth and so on. And on the other hand, look for sales opportunity when you see the market moving from the top side to the downside by creating lower lows. Now, to make all of this clear to you, these market structures that I've shown to you are time sensitive, meaning they are relative to time. The way the market moves is in coordinate with how time actually affects it. So it's very important to pick the right time frames when trading. That's why when I'm trading, I take my analytics from the weekly, daily, 4 hour, 1 hour, and then my entries on the 30-minute. Now, why do I use this particular 4 time frame? Now, here is it. I want to trade in between. I want to identify the 1 week range and then go down to the 1 day and look for the key levels on the 1 day. Now, once I get the 1 week range, the daily range, now I go down to the 4 hour to actually go do the main market structure breakdown. The main reason I'm identifying the 1 week and then the 1 day is simply because I don't want to trade into key levels. I don't want to buy when the market is already close to a key resistance level, and I don't want to sell when the market is already close to a key support level. That's why I have to first of all mark out this particular one separately before I go down to the 4 hour to do the main market structure breakdown by identifying my lower highs, my higher highs, and then all of that. So now let's get straight into the main video itself using the real chart. And for this video, I'll be using Swiss francs, and then the Japanese yen. Now let's take a look at this market right now. Now note we are on the weekly time frame, so each of these bars you see here represent 1 week. So let's count how many bars are here. 1, 2, 3, 4, 5, 6. Now 4 makes 1 more, so this is 1 month and 2 weeks that we have in here. Now after knowing this, now I want to trade in between this range alone. I'm not interested in looking at this backward side, not at all. My main place of interest is trading in between this range at the moment. Let me mark out the range for you. So let me get my position, my drawer, so I can. So now my main interest is trading in between this range you see here. This range here is my place of interest that I want to look for a trading opportunity in. And looking at this place, you can see that what the market is making a serious bearish push to the downside. So for that reason, I'll first of all mark here. Here is my weekly. I'll just take it from here, being the weekly support level. So now to make it easier for you to understand, I'll be using something to identify each of them by adding a test to them. So let me get that right. So take it from here. This is the support right here. So now I'll just tag it here. Weekly support will be w.else as weekly support. Now I'm going to save this, save as template, so that it will be easier for me to use next time. WSR, weekly support resistance. So I'll just name it WSR. Save. Now next up is simply, I'm looking at the top of this range, which is right here. So now I'm also going to tag this as well. But now this what weekly resistance. So I'll just change the S here to letter R. Now done. Now I have these places marked out already. I have my top here, which is the end of the upward trend, and then this lower side, which is where the downwards push recently ended. Now after this, the next thing I'll come over to the daily time frame also. Now on the daily time frame, I simply want to see what the market is currently doing at this level here. And you can see on the daily time frame, the market seems to be giving us this vibe to the downside. And if you want to use the basic smart money concept, you can see that the market has already given you a major market shift here to the downside, which is switching from the uptrend to the downtrend. You can see it clearly right here, where the market has given you this market shift. So this alone is an epitome that this market is looking bearish. Why? Because we have a key level here where the market fell from drastically. So if the market can move from here downwards like with this sort of momentum, it simply means that we are looking for the sell side. Now on the weekly time frame, I've confirmed that there's a high bearish momentum in the market. On the daily time frame, I've also confirmed that there's still high bearish momentum to the extent whereby the boost can't really challenge that much. Now the next thing you do from here is that you go down to the 4-hour, which is where the main market structure analytics come in, where you identify your market shift, which is also known as change of character, your break of structures, and then look for your main entry opportunities. But remember that from the weekly time frame, we've already made our decision, and our decision from the weekly time frame is that there's bearish momentum, so we should be looking for sales. And on the daily time frame also, we've confirmed that the market is still bearish, so we're still more focusing on sales. So for that reason, we'll go down to the 4-hour time frame to see if the 4-hour actually gives us a market structure that fits into what the daily and then the 1 week has given to us. So for that, I'll come back to the 4-hour time frame now, which is where the main market analytics comes in. So now let's take a look at this market on the 4-hour. Now if you look at the 4-hour right here, where did the market first first give us the market shift here? We have the market shift right from here. So when I identify my market shift, which is also known as the change of character, I like identifying it only from the major levels. So for that reason, I'll take it from this particular level here, which is the most vivid one. You can take this right here. So for this, I have my 4-hour market shift right here. Now after this 4-hour market shift, now I need to see if the 4-hour time frame has also given us a break of structure as well. So for that reason, I'll get my break of structure right here. Now next up is simply another break of structure right here. Now we can clearly see that what the market is on a downward movement and then there's no upward surge yet. So we can see the downtrend here is still confirmed even on the 4-hour time frame that what we are still on a sell side. So we should be only looking for selling opportunities. Now when it comes to looking for selling opportunities, now here's where the important task comes in. You need to identify, if you are a supply and demand trader, you look for supply and demand. Now I am a supply and demand trader, so I'll be looking for supplies and demand. And if you're a support and resistance trader as well, you look for only your support and resistance level within these areas. And if you are whatever concept you trade, you simply look for those ones. So I'm a supply and demand trader, so I'll be looking for my supply and demand levels within this area. But remember the first thing we did on the weekly time frame, we'll look for the where the downtrend started, where the down power started, which is this area here, which is a weekly resistance, I will call it. And then we'll look for where it actually had a major stop, which is this weekly support right here. So now looking at this market right now on the 4-hour, I will simply come and identify the main market structures, which is looking for our market or change of character, which is known as market shift. Now the reason why I skipped this part here and I use here as my main change of character is simply because when I'm identifying the change of character, I only look at the where there was a decisive move upward before it was swept out. If there was no decisive move from any particular point there, then I'll wait till the market sweep at that area of decisive move. And the reason why I wait for the market to sweep out those ones is simple and straightforward. The areas of decisive move are likely to create more decisive moves again when the market gets there. So for you to get a better and clearer opportunity, only focus on those areas whereby the market gave you a decisive move. If there's no decisive move, I'm not taking a trading opportunity out there, because I only want to take whereby the market really shows that what I'm moving to the downside, and this is the final answer. Not areas like this whereby you can see I cannot take any market shift from here. If not, some people will identify it from here, but me, I will not take it. The reason is simple. Within this area here, the market couldn't make any decision on time. You see, it came here, came back here, came here, came back here, came back. So if I see a market moving in this manner, I still won't consider it until the market takes away this particular area. Because if you look at it from this area right now, this area that I identified here, you can see that the market went straight upward from here, straight up, no more challenges like it did here. Here was just a pure ranging. So I only focus on these areas with clear momentum before I take my trade. Now for those of you who don't know how to identify your market shift and then change your market shift and breakout structures, now here is it. Now let me say the market was going upward like this. Let me say the market was moving upward like this. Now where you decide your market shift is when this market comes back upward here and then comes back down here. Now here becomes your market shift. You see where the market took out this particular first major low here. This is where your market shift comes, because the market was creating what? Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then higher low here. Now by the time the market sweep out this first most clear higher low is when you know that what the market has switched to the downside. So now your whole momentum changes to looking for selling opportunities. Now even after this one, you don't rush into taking the sell until the market gives you what we call the major break of structure. So after this, you still want the market to push a little bit upward, come back down, and then by printing your break of structure right here. Now here is your market shift. Let me mark it out, and then here becomes your break of structure. Now let me explain these two things to you. Now your market shift is where the market took out the first swing low. For an uptrend is when the market took out the first higher low, and then your break of structure is when the market has confirmed to you that what, I've taken out this swing low here and I've changed my mind that I'm moving to the downside, so therefore I'm creating a break of structure to continue breaking downwards. The break of structure simply means the market keep breaking to that new direction that it has created. So now if it's in a downtrend, it's the opposite. In a downtrend is when the market took the first, let me draw a downtrend also so that you can get the illustrative example. So let me say you have a market moving in this manner like this. Now you see that where your market creates your major market shift is when the market took out this particular is it lower high here. When the market took out this lower high here, you have what we call the market shift, or also known as your change of character. So these are the areas you look into. That's why some people in this particular market here, Some people might identify here as their major change of character. Why me I will take this particular area? Because when I'm taking my trades, I only focus on the major areas where the market made some decisive moves. So here, from here to here, there was a decisive move. So for that reason, I will consider this area. Now I believe you all understand the idea of breaking down the market. Now after this, now let's take a look at another important thing, which is looking for a trading opportunity. Now how do you look for a trading opportunity? We have those of you who are trading smart supply and demand, which is the category I fall in, and we have those who are trading support and resistance. We have those who are also trading what we know as the fair value gaps, the other blocks. So whatever thing that you are trading, it's up to you to decide the point whereby you want to get your entry at this point. So now as a supply and demand trader, let me show you where I will be taking my decisive entries. So now guys, at this point I want to identify my supply and demand levels. So now let me take a look at the market. Since I'm looking for sales, I will not be looking for demand, but I'll be looking for only supplies. Now when it comes to me identifying supply and demand, I have specific rules that I put in place. And for those of you who are not used to those rules yet, let me just use this opportunity to share them with you. So let me go over there to my notepad where I have everything written out. So now, whilst you are watching this video, in case you are new here, I also have a Telegram channel where I drop free trading signals, and a Telegram group where you can ask me questions, drop whatever question you are having. So the link to that Telegram group will be down in the video description, so you can also check it out. So here's basically my backtesting data for this same strategy I'm sharing with you. So now let me just open any of them here where I have there. Say identify supply and demand levels. So SD represents supply or demand. Now here are the rules. Untapped zones, candles not overtaking directional candles and only use candle bodies. Now untapped zone is simply areas whereby the market hasn't tapped yet. So for example, let's say we want to identify a supply right here. Here we have a supply right here. Why? Because this candle is not tapped yet. Now when it comes to identifying your supply levels, you take the last bullish candle before the bearish momentum. So for that reason, we have a supply right here, and it's still not tapped yet because this bearish move, this week here couldn't touch it, so it's still untapped. Now following up here, we have another one right here, which is this one here. Which is another one here, which is also not tapped yet. As you can see, remember the rules. It said what? Identify supply and demand levels. So make sure the zones are untapped, meaning no any other market has come back in there. And then secondly, candles not overtaking directional candles. This simply means that what? The bullish candle you are using to identify your supply level should not be bigger than the bearish candle that came immediately after it. That's what we mean by the directional candles. And only use candle body. Now only use candle body, simply what I've done here. I simply identify the candle body and left every other thing out of it. Now next one, simply identify liquidity must take at its own high. So now liquidity is simply the area whereby the market created the first major pullback after leaving. So for example, here becomes our area of liquidity. Here's our area of liquidity, so I'll just mark it with dollars right here. Now remember the rule says what? Liquidity must take out its own highs. So you can see where here was where here push up to create the liquidity, and then the market eventually broke out of. So the liquidity also led to a break of structure, which simply means that what? We are seeing a very much downtrend. Now its own high, so it changes. If it's in an uptrend, you look for the opposite. If it's in a downtrend, you look for the opposite as well. Now pull back to key level and wait for confirmation. Now you see, pull back to key level and wait for confirmation. So now, after identify my supply levels like this, my liquidity level, now I simply have to wait for this market to trade back to this supply level before I will decide my trade. Now after that, you simply say confirmation, wait for candle to close in direction of trade on 15-minute time frame. So now for this 15-minute time frame, it depends on the time frame. So when I'm trading on the 4-hour or 1-hour time frame, I basically wait for the 30-minute close. So all totally depends at this particular point, because you can't be trading the 5 minutes and then waiting for a 15-minute candle close. It doesn't work that way. So these rules here are basically customized based on the time frame I trade, because I take my trade on daily, 4-hour and 1-hour time frame. Now For those of you who are barely new here, I trade any of those times. I can take like the trade we are currently holding right now on GBP USD. I took it on the daily time frame. Here is it here, GBP USD. You can see where I said it here. All trades are based on daily time frame. You can see here is a trade right here. We got an entry on GBP USD, entry at 34.56, and then stop loss at 1.29995, and then take profit at 315. So this is the first take profit one, and our overall take profit is at 1.34366. You can see, so this one was taken on the daily time frame right here. Now if I should come over here right now and show you the price of GBP USD, right now you can see GBP USD is currently trading 1.3076, and our entry was around where was our entry? 1.30459. So meaning we are in a little bit of profit right now, but it's not up to our target. Now back to this. So now with this already marked out right now, we are simply waiting for this market to trade here, give us a close on the 30-minute time frame, then we'll get our entry. So for that, let me just play it till it gets there. So just going to wait for it to get there. So now here is simply it. At times the market might not get there, at times it will get there. So the main thing I do is that what if the market gets to my level, I take the trade, and if the market doesn't get to my level, I don't take any trade as well. So I simply have to wait till whenever the market gets there. So as you can see, the market goes, comes. Okay, it eventually tap into it here. As you can see at this point here, the market just tapped into it. Now after the market has tapped into it, now here is it. One thing that I noticed that a lot of you get confused with. Some of you identify multiple levels, like do I have this level here, I have on that level here, and then you don't know which level exactly to take your trade from. Now let me use this opportunity to break that down for you. Now when you are confused about the level to take your trade from, it's basically simple and straightforward. Make sure that there's more than 30 pips between these two levels. So for this one, let me take a look. There are about 131 pips here. So if there's a difference between almost 100 pips from your first level to the next level, it simply means that what this level here is likely to work. It has a higher percentage to work. But if there's less than 30 pips between here and here, then you just have to ignore this one and wait for the higher one. So that is simply what I do. So now here is it. We've gotten the market to this supply level here. We've gotten this bearish close outside the zone here. After the zone got tapped, we got this bearish close. Our liquidity is swept now. Now the next thing is that we'll take our entry. So for our entry, we put it here, which is just when this candle closed, and our stop loss, as usual, a little bit above the supply level that we drew here. And then our take profits here. So this is solid 1:3, and then we are likely to extend it here. So 1:3, and then here we'll give you a 1:4, which is take profit 2, and then overall you can aim for a 1:6. Now to make this video more easier, let me just target this previous support area. Know that this is a weekly support area and the support is likely to hold. So for that reason, I'll mainly focus on the weekly support. Now I'll simply just play it. Now you can see the market is playing on. Now our take profit got smashed, and then the market is reversing now. So here you can see that our take profit is smashed right now. So now this is simply how it works. It's as simple as this. You identify your supply level, you identify your liquidity level. Just make sure that you follow the market breakdown system I gave to you. Remember, the first thing is that you go to the weekly level, the weekly time frame, mark your weekly high and your weekly low, which is where the current market movement started and where it has ended. Now secondly, you go down to the daily time frame to see if the daily has a different structure to show to you. If the daily doesn't have a different structure to share with you, simply go down to the 4-hour time frame, which is where you identify. Look, now when marking your levels, focus on the new market movement. Forget about this old movement over here. This one is far gone. This one is only for those people who are trading the weekly, daily time frame. This one is far gone, so you don't pay much attention to it. You only pay attention to this new one right here. That's why I see that what over here I focus on identifying my market shift, my breakout structure, and then my liquidity level and my entry right here. So it's as simple as this. Now if you have any much difficulty about this, all you simply have to do is that what join my regular weekly market analysis where I share with you a step-by-step guide. Like my 2 times weekly, I do it on Mondays and Wednesdays, where I go live and then share with you live trading where you see me do analytics live. It will help you get more idea about it. Now from here on, it's simply simple. Now you can keep looking for more selling opportunity if you wish, or at times you just have to let go of it. So now one thing about me is that I trade a lot of pairs. You can see them here. I trade a lot of pairs, so for that particular reason, I actually don't repeat trade. Like you see, after taking this trade right here, for me to take another sell right here, it has to give me like a high level of convincing before I'll take another one right here. Else I'll just move to a different market. So now that is simply it about this video, and this is simply how you get to break down the market. Remember, I gave you every single thing you need to know about market structure, a pure SMC top down analysis. So with this already said, have a lovely day. See you in my next video. Bye.